If you're a Bitcoiner, you think that Bitcoin will eat gold and then set its sights on the bond market and just eat everything, right? It's going to eat every store of value. And it's a question that I have for every single Bitcoin Treasury company, and it's also a challenge. And that is, can you remain sovereign? Can you remain aligned with Bitcoin and not become co-opted by the credit markets? And what we see happening right now is a credible attack, right? If you have centralization of the coins, you have centralization of the hash power, you have centralization of the development, and you have centralization of the nodes, that is boiling all of the frogs. And so if that is allowed to continue, that is why Bitcoin would be dead in...
Welcome to the Bitcoin Dialectic, Soleil.
Hey, thanks for having me. I really enjoyed your conversation with Adrian, and so I'm excited to be here.
Oh, you listened to it?
Of course.
Oh, awesome. That's great. So you're a founding member of True North. You're the guys that I actually learned about treasury companies from. It's a bit surreal to me that I now get to interview you. And I'm not the only one. There are many people. You guys are like the OGs of treasury companies, right? So we're going to talk a lot about treasury companies today. So I want to address the elephant in the room right away, because many Bitcoiners, including many OGs, really dislike the whole treasury company phenomenon.
Oh, yeah.
Can you steelman their position to start off with? Like, what's the best argument that they have against treasury companies?
Absolutely. And I have these paranoid thoughts myself, right? Every once in a while, I have to look at myself in the mirror and ask, am I a real Bitcoiner? You know what I mean? Is what I'm doing good for Bitcoin, or am I supporting the control structure? And I think Jimmy Song said it this way when he was asked, and then you'll probably get some of echoes of what I'm saying from if you listen to Simon Dixon or things like that, where if you assume that the Wall Street itself is part of the control structure, right? And publicly traded companies get their power from that structure, right? You have to file paperwork with the government, and the government puts a stamp of approval on you and says, we are going to allow you to be a publicly traded company. And by doing that, that is what allows you to do things like run the ATM program, which in a sense is really a legal money printer for companies, right? So the federal government prints money, and if we do it, it's counterfeit. But when a publicly traded company basically prints copies of their own shares, that's just considered, going to the market. And so if you want to look at the entire Wall Street mechanism as being immoral or incompatible with Bitcoin, then you could make the argument that participating in it would be strengthening the control structure and somehow, getting in the way of Bitcoin adoption and making it, ubiquitous and universal for all people. And so I do get that argument. And I think it's the fundamental question that we have today is, and it's a question that I have for every single Bitcoin Treasury company, and it's also a challenge. And that is, can you remain sovereign? Can you remain aligned with Bitcoin and not become co-opted by the credit markets? Is it possible to remain uncorrupted and keep the governmental or the economic elite power structures from manipulating your company, shorting it until you capitulate into some decision, or withdrawing access to credit markets? For example, we've seen Strategy take every step that they possibly can to defend the credit quality of the prefs, which as a shareholder doesn't bother me, because I understand that is the tool that they have chosen to buy Bitcoin with, right? So as a common shareholder, I have to understand that I'm subordinating my interests to the interests of the pref, right? If the prefs fail, then my common shareholder price fails. So I think it's fair, and it does make sense to understand that is the case. And if that's not your expectation, then I think you probably have unrealistic expectations. But if you're subordinating yourself to the credit markets, are you still sovereign? Like, are you still in control of your company? And can you make all of the correct hard decisions that need to be made? So I think that's the Steelman argument, and that's the question, and that's the challenge that Bitcoin Treasury companies face.
Now, what I wonder is, on one hand, you have the steelman, right? You have that maybe treasury companies are a betrayal of Bitcoin's ethos. Now, the counter argument to that is this is an inevitable like pit stop, or this is the inevitable part of the journey to hyperbitcoinization. Do you share that opinion or sentiment?
I have to, otherwise I would be admitting that they're correct, and I'm basically working against my own interest. And so what I try to do is imagine what life will be like 50 years or 100 years from now when we do have hyper Bitcoinization. And in that reality, I ask myself, will companies continue to exist? And I think the answer is yes. And will some of them trade on a liquid stock market? I think the answer is probably yes. So when 8 billion people on the planet are using Bitcoin, and when 100% of companies are Bitcoin treasury companies, or they don't necessarily have to do leveraged treasury plays like Strategy and Strive, but every company will be a Bitcoin company. Otherwise, you won't be a company, right? Because if you are going to basically shoot yourself in the foot and handicap yourself by holding on to dollars when every single other one of your competitors is getting appreciation from Bitcoin, you cannot compete. You will not stay in business, right? So at some point, if uh, Bitcoin becomes a universal store of value, medium of exchange, a unit of account, then there will be no such thing as a company that's not a Bitcoin company. And so in that future, I kind of feel like I'm living in that future now. And so, that's the way I look at it. That could just be pure copium. And I'm just, my bias is obviously like I literally making a living doing this, right? I quit my job. And so if I don't make money doing this, I get evicted from my house and my family starves. So I fully admit that this could just be me, explaining my biases. And that's actually something that I have to ask myself too. Have I subordinated myself to the stock market? Because I don't know how much you want to get into it, but I've made some decisions recently because I've been supporting BIP-110, and that has cost me, number one, a lot of money by making this decision, but it has caused me to choose between subordinating myself to the way that I have chosen to make a living and what I think is best for Bitcoin. And so it's been a very difficult decision. And yeah, I think that's the story that I have to tell myself, is that eventually all companies will be Bitcoin companies, and people will still want to invest in them. There's going to be companies that are going to be finding cures for cancer and making better phones and just whatever. And those companies will own Bitcoin, and people will want to invest in them, and they will want us to invest in them for a piece of equity. And I think that's all uh, part of a free market and all reasonable.
Yeah, yeah. I also believe that treasury companies are something of a conduit that will eventually help us realize the dollar milkshake theory, that is going to take dollars or other currencies and just like pump that liquidity, that money into Bitcoin. So that's my argument as well. Again, it could be cope. I'm heavily invested in treasury companies.
No, I agree with you. And as long as what the company's doing, I think, is aligned with Bitcoin, I think it's fair game. Some people will say that these, you know, pure play, companies are not providing valuable products, but like a company like Tesla makes robots, right? Um, Vehicles are really just wheeled robots, and so they're a robot making company. They're not a car company, and they don't even talk about Bitcoin, but they have Bitcoin in the balance sheet. And so, you can go that route. And I think eventually 99% of the companies will probably just be that, offering products and services. However, In the case of Strategy and Strive, they are competing with the other bond type products. And, as far as I'm concerned, they're superior products to these other fixed income products. They have had a little bit more volatility than we had hoped at the start. But, if you're offering a product that is better than other products, then, I think it's a reasonable business plan. And I see no reason to object to the leveraged plays simply because they don't offer, physical products.
This episode is powered by Bitshala. A lot of people discover Bitcoin and then ask, what's next? If you're a developer in India, Bitshala is the answer to that question. Bitshala is a grassroots education initiative run by Indian Bitcoiners to help developers learn Bitcoin the right way. Bitshala offers a paid fellowship to selected participants to work closely with experienced mentors, contribute to real world open source projects, and build credibility within the Bitcoin ecosystem. If that sounds interesting to you, check out the link in the description. People keep asking me where to buy Bitcoin safely in India. I use GetBit for all my Bitcoin purchases. It's the one I recommend to friends and family as well. GetBit is India's first Bitcoin only exchange. No distractions, no casino coins, only Bitcoin. You can set up a Bitcoin SIP with GetBit starting at just Rs 100, which makes stacking sats really easy. And whenever you're ready, you can withdraw your Bitcoin to your own private wallet for free, so you don't ever have to worry about a hack. If you want to check it out, you can use my code DVJBTC for 30% off on platform fees for the first 3 months. The link is in the description. So, a little bit on that. We're talking about STRC and SATA, these preferred equities, right? Now, even when STRC was launched and when it was pitched to the Bitcoin sort of crowd, the argument was that STRC, SATA, products like these are going to demonetize the $300 trillion bond market, right?
Yeah.
But they are not, because they are not legally debt. Legally, they're still equity. So even if you look at the distribution of ownership, I think it was Fong Lee who said in an interview that like it's approximately what 80% of all STRC is held by retail. That's not going to demonetize the $300 trillion bond market. So I feel like there is a cap to how much volume or liquidity can exist with these products. What's your take on this?
Yeah, and that's it's a good thing to watch out for, because that was the catalyst that people were hoping for. Is like, look, there's this $300 trillion bond market that we can attack, and we can start siphoning money from the bond market into Bitcoin. And if you're a Bitcoiner, you think that Bitcoin will eat gold and then set its sights on the bond market and just eat everything, right? It's going to eat every store of value that exists. And so one thing that I have tried to do anytime I'm arguing with someone is that you can tell that you're arguing with someone that has an open mind if they are willing to identify their falsification criteria. And what that means is, okay, I believe something, but I'm willing to provide you with the bar that if you meet that level of evidence, I'm willing to change my mind because you have falsified my closely held belief, right? And so if I believe that the prefs are going to eat the bond market, and then after they're, say 3 years old, that's the other thing that we've kind of attached our hopes to, is that once they have that seasoning and you have a 3-year period where you can hold up the performance of the prefs next to the performance of these other institutional type products, then we will have a history of competing well over a long period of time. So I think STRC just went over a year old, didn't have its 1-year birthday pretty recently.
Yeah, it should have been.
Yeah, so in 2 years, once we get that 3-year seasoning, if they don't start becoming institutionally adopted, then I think that falsifies the thesis that we're going to start eating that market. If it's still a retail product in 5 years, then I think we have to admit that it didn't work.
That's fair. That's fair. I want to stick to STRC versus SATA for a little longer. So, SATA has entered the market relatively recently and it has done really well. So, they've come up with daily dividends and the dividend rate is also higher. So, 13% versus strategies STRC's current like 12%. Why has SATA managed to hold its power better than STRC? Is it more to do with the daily dividend or is it more to do with the higher dividend?
Yeah, that's an excellent question. I'm not sure I know the answer to that one. I guess I could cop out and say both, but I really think the daily dividend is innovative, and if it's innovative, could it be considered disruptive? And that brings me to really what is my entire investment philosophy, which is something that I heard Michael Saylor say, even though I've been kind of beefing him with him in the Twitter Spaces recently. At one time, he said, "You invest in a company when it is disrupting and the clear winner." And so, SATA with this daily dividend could be disruptive to, it was the first daily dividend. And I think they even rebranded themselves as the Daily Dividend Company, right? Or something like that.
Yeah.
So all of these upstart companies have to innovate and have to be clever with their ideas, because that's what Strategy had to do in order to compete with Microsoft. He was never going to be able to do it just with his business intelligence software, even if it was better than Microsoft's. Microsoft just had the monopoly and they were just able to sit inside that moat. And so he had to find a way to disrupt, against his stronger competitors. And Strive will probably never surpass Strategy's Bitcoin count. However, they could, be the upstart company that, maybe has better metrics on some kind of shorter time horizon, something along those lines. One thing that I think we talked about this last night on True North is that they're, because of Strategy's size, they could be more appealing to institutional short sellers, because if you want to put some serious money in the market, you can't really do it on the small players without moving it too much. And so you can throw these big money dollar figures around with something like a Strategy or a Stretch, whereas SATA is kind of like, it's the smaller food that's a little bit less interesting. But the daily dividend also means that you can't hold it for 2 weeks or 4 weeks and avoid paying that dividend, right? Because when you short a stock, you are responsible for paying that dividend to whoever you borrowed it from. And you can do that with Stretch. I actually tried it out once, right? I shorted Stretch for like 2 or 3 weeks, and then I used that extra buying power to, make some extra trades. And it did okay, but I I lost track of the dividend date and actually held it through the dividend, so I ended up having to pay that dividend. It still worked itself out, but I was like, this is too much trouble. I can't be bothered. But yeah, that is a little bit of a defense mechanism against the shorts, is that if you hold SATA if you short SATA at all, you're going to pay every single day. It's just, you're being bled slowly, and you don't have that 2 to 4 week period where you can, it's not 4 weeks anymore, but, Stretch went to twice a month, but, you could short it right after they pay the dividend, and then hold it for 2 weeks and do whatever you want to do with that cash in the meantime. So it could be some of that game theory playing out. There was something that I think Jeff called out, in that the what is it? What is the calculation when you, not the actual yield, but the yield that you calculate based on your entry price, right? The
Effective yield.
effective yield. Thank you. So they did notice that Stretch and SATA started trading around levels to where their effective yields were the same. And that's interesting. So that's probably something to watch as well. And maybe there's some kind of hidden gem in there somewhere that people are willing to buy the dip on one until their effective yields are identical, and then there's really no arb left between those two plays.
Yeah, I did bring this up with Adrian when we were
Mm-hmm.
chatting. And yeah, so like again, sticking to this subject, what is stopping strategy from making STRC also a daily dividend preferred?
I think nothing, except once you, right, they were already in the middle of going towards the twice a month. And it's like, okay, you've already gone through all of the work to get that done. And they had to carry a shareholder vote. I think because of where Strive was incorporated, they didn't have to hold a vote. And I think strategy, maybe based on where they're incorporated from, had to follow different rules. And so then it's like, okay, now, like Fong Lee was emailing and texting me every single day to go and vote, right? I mean, it was a bot, obviously, but I mean, he just wouldn't leave me alone, you know what I mean, until I voted my stretch shares. And I finally did, I voted yes. But you know, you're right in the middle of that. You go through 6 months of pushing that through. Like, you can't just stop that in the middle and say, oh, dailies are possible, let's do dailies. So it'll probably be the next step. I don't know how long. Well, and actually, when I saw it, I thought, oh, well, it's inevitable that they'll have to do it too. But they can just sit around for 6 to 12 months and see if it doesn't work for Strive, right? If Strive goes down to 75 and stays there for some reason, some unintended consequence that we don't realize that the dailies have on the stock, now they have the benefit of not being, leading the way and taking all the risk, because everyone's been copying Strategy's playbook for the last 5 years, and some of them have done better than others, but it's always been Strategy that has had the courage and the innovation lead, and everyone's basically just been, copying them. But now they can sit back and say, okay, let's see if you really had a good idea or not, and if you fall flat on your face, then we just won't do it. And so it's a feather in the cap of Strive that they were able to come up with this innovation, but it's also, it also benefits other treasury companies that now can look at the two models, and we'll see which one does well and which one doesn't.
Yeah, that's actually very true. I didn't think of that, but that's really smart actually to just wait out a little bit. What I was wondering is it is inevitable that there are going to be new entrants in this whole preferred equity space. So there are already many other treasury companies, and some of them are going to come up with their own preferred equities that are offering daily dividends, that are maybe even offering higher dividends, 14%, 15%. And we've seen that investors have not really cared about the extra risk that they're taking with SATA
Mm-hmm.
compared to stretch. So maybe investors will continue this trend of not really caring that much about a little bit more risk here and there. And they'll flock to the next preferred equity that's offering them an even higher dividend. So isn't that something of a death spiral? Isn't this going to continue until the free market gets to a point where one of these companies takes too much risks and then sinks?
Exactly. That's definitely going to happen. And I don't remember if you've seen or I don't know if you've seen the last Seyfedina Moose interview with Michael Saylor. That's one of the things that they kind of argued about, and it got a little spicy at one point. And the argument that Safe was making, and I gotta say, I'm team Safe on this one, is that when you get into this competition, right, for credit, it's like, okay, I'm going to offer 10%, I'm going to offer 11, I'm going to offer 12, and at some point you cross the threshold of um, you know of risk, and someone is going to offer too much risk. And actually, you know what, I might be getting confused. That might have been Jeff Booth's argument, now that I think about it, but I think it aligns pretty well with what Safe was saying as well, is that in his mind, he sees people lending out their in the future. He sees a model where we loan our Bitcoin for equity in companies, not just for yield. And that kind of, probably got under Saylor's skin a little bit, because he's like, well, this is my whole model here. You know what I mean? You're basically saying that everything that I'm doing isn't going to work. So I'm a little bit on team safe in that sense, where if I'm sitting on a big Bitcoin stack in the future, I don't really want to put it at risk for some yield, right? I would want to put it at risk for equity in a company that I thought would either do some good in the world, or if it's successful, would actually return more Bitcoin back to me than what I loaned out. Saifedean also has some good talking points about the trend of interest rates over time. And there was this book, I wish I could remember the name of it, but it was a book that talked about interest rates over like thousands of years, and they claimed that they are always going down. They will obviously pendulum swing up and down, but they claimed that that interest rates are trending towards zero, and have been ever since money and lending existed. And so in that sense, eventually, if it does reach some kind of asymptote, like near zero, then this whole model, at some point would seem like it would blow up, because you'd be offering people, 0.5% or something on stretch. And at that point, what's the big deal? But I mean, even if that happens, then I think we've reached hyperbitcoinization, and everyone's using Bitcoin, and it's Bitcoin utopia, and probably, all of these things that we are interested in now are probably meaningless in 100 years. And so that's fine with me too.
I have questions around hyper-Bitcoinization scenario when it comes to treasury companies, but I'll get to that later. I have one more thing to say about like strategies, what I see as predicament, because the point of Stretch was that now strategy can finally raise money and buy Bitcoin even in bear markets. But that can only happen when Stretch trades at or above par. Now, with new entrants, even with just one new entrant, SATA, we already have seen that Stretch is not trading at par. And also, people have, or rather, the market has realized that these products should trade alongside Bitcoin. So if Bitcoin is going down, these products become riskier, and hence that should reflect in the price. So these products also go down. So Stretch is not being used to raise money in a bear market. MSTR can't be used to raise money in a bear market, at least not accretively, because for accretiveness, the MNAV has to be above 1, which it is not usually in bear markets. So we are back to a situation where strategy can only buy Bitcoin during bull markets, like it buys the top again. So is there a way out?
Maybe not, but they were able to buy some at various points during the bear, right? So you could argue that some of them were less accretive than others, but at the end of the day, if a shareholder gets value, like even if the stock is trading below 1 MNAV, as long as it has enough leverage or amplification to justify bridging that gap, then the common stock shareholder can still get a higher price over some long period of time. So I don't necessarily know if the model breaks during a bear market exactly, and the product is still new. So again, in 3 to 5 years, if we go through an entire full cycle and we've got bear and bull to compare, but then again, maybe the bear is just for hodling, like Bitcoiners do, right? We just grin and bear it, and we diamond hands through the thing, and maybe that ends up what happening. And really, the convertible bonds, I think the best deals that they were getting were in the bull markets as well. So maybe it's not an absolute solution for bear market buying, but it does seem like it's still an improvement to the convertible bond deals where those players are not really aligned with the incentives of Bitcoin and like the common stock shareholders necessarily. They're going to be arbing and shorting it and longing it and playing a lot of little tricks to play little gamma tricks along the way. Um, so yeah, I don't really know. It is definitely going to be interesting to watch. I mean, I hope it does work, but I mean, it's not a done deal, right? I mean, I think it remains to be seen for sure.
Yeah, for a while it seemed like they had solved this like bear market buying Bitcoin problem, but now it feels like not really. We don't know that yet.
Yeah, I was hoping that STRD would be kind of the solution. I was the most excited about that one when it came out because it was
Can
paying
you
a higher
refresh
interest.
my memory on what STRD is?
Yeah, so STRF was the one that came out. That's at the top of the stack. It's the safest. It's got a little bit lower of an interest rate, and then STRK has the component that has the conversion option for shares. So there's a little bit more upside built into that one. And then STRD was the one that came out that's nearly identical to STRF. It's just lower in the capital stack. So it's a little bit riskier in the event of, bankruptcy or whatever. And so it offers a little bit more interest. And I thought, oh, well, I just want the one that pays the most interest because as you said before, as SATA came in, like nobody cared about the extra risk. They were just like, I want more dividends and I want them paid every day, right? And and that was the reaction that I had with STRD was that I think they'll pay every single dividend is for as long as they remain a company. I think they would retire the pref and just buy all the shares back before they fail to meet a dividend payment. So I wasn't really bothered by the extra risk in STRD and like just pay me the extra interest. And it didn't really pan out that way. It didn't really go to par and stay there. Now I think as soon as the Fed starts lowering interest rates, and I still believe that they will, then those products start to become more interesting. I think the upside for the share price in those stocks becomes a little bit more interesting. And I think that they will go up in value if the Fed lowers interest rates. They'll become a little bit more attractive in that sense. Whereas Stretch is going to have the same appeal regardless of the interest rate. Like there's no value of Stretch tied to tied to whatever the Fed decides to set as rates. So I still think that was a good product, but the market didn't really care about it. So we'll see. I'm not even sure if I answered your question at this point. I got off into a little bit of a tangent there.
No, no, I think that's what I'm trying to understand. Like, what solves this problem for strategy?
Oh yeah, so that's what I thought. STRD was the solution because it was understood that it's riskier than the other prefs, right? So I thought, okay, STRD is something that they could do and basically ATM even if the market wasn't going very well because those investors would be accepting extra risk anyway. And so I thought STRD is like that safety valve that they could use to even maybe ATM STRD and do stock buybacks. I thought, they'd be able to play all these different little tricks and apply leverage to their common stock shareholder price with these little levers. But that, I don't know. I don't know if that starts to get into the Ponzi like argument. You know what I mean? Like if you're buying it, but then you're selling it, and then you're selling it to buy it, and then buying it back and pumping the price, and then I haven't thought that through whether ATMing a pref to do buybacks would put them in some jeopardy in that scenario. But you have to make sure that you don't you have to make sure that you don't close the loop on the Ponzi, right? Like as long as you're staying out of that danger zone, I think they have a lot of optionality with things that they can do as long as they just don't, cross that line. And so far they've done okay with it, and I think they're fine. I think all the Ponzi accusations are unfounded, but they do have to make sure that they, I don't know, keep themselves clean, I suppose.
I also think that the line is imaginary because cash is perfectly fungible. So
Hmm.
whether you raise money by issuing STRC and then buy Bitcoin with it, or you raise that money to and then you sell some MSTR to pay the preferreds of STRC. So that's one way to do it. Or you can just raise money using STRC and just pay off some of the dividends using that raised money and use the money from MSTR issuance to buy Bitcoin. You can just swap that money over. And in the end, cash is fungible. But for the optics of it, it would be really bad if they did that.
Yeah, I agree.
It's just optics. But anyway, you did mention at the start that you wanted to discuss a bit of stock selection, and that's been on my list as well, because I've been wondering if there is a good enough case for investing in MSTR when you have smaller treasury companies, especially with Strive in the picture, that are doing well and that have a potential to do even better. Because the scale at which MSTR is in, the strategy is in, it's very hard for them to provide a high enough Bitcoin yield to, let's say, double their Bitcoin stack. Like, it's very difficult for them. But for smaller companies, providing bigger and bigger yields is still possible.
Yeah, that's a good point because strategy probably gets to 2 million Bitcoin, but is it going to take them 20 years, 30 years to double their stack from here? I guess that would be a triple, right? What are they at? 800,000? I can't remember the
800
last count.
something, yeah.
Yeah. So they're going to have to more than double to get to 2 million. And that is going to definitely slow. So they're those metrics that they came up with, the yield and, the rate of yield is going to slow down at some point. And it's not that they'll reach a certain amount of Bitcoin and stop there, but it's going to be like, okay, we acquired $10 billion worth of Bitcoin this week, but we only got like, like 100 Bitcoin or something. It's going to be insane numbers, right? So they're going to be able to add little, I don't know. And in 100 years, is strategy going to be announcing that they bought one Satoshi? You know what I mean? Like a week. It's going to just be ridiculous numbers at some point. But so yeah, your point is well taken. And those are some of the decision makers that people are making. And there's going back to the optics thing too, like a lot of times they do stock splits because it becomes more attractive to people thinking that they can get more shares, right? If you've got $1,000 and you can get 1,000 shares, that seems better than $1,000 and 100 shares. It's like it's this weird thing that investors um, appeal to. And so there is that appeal that, like, okay, in the next bull run, if Bitcoin goes to 250 and strategy goes to 1,000, that's a 10x from here, right? We're trading around 100. But something like Strive trading at, I don't know, 12-ish, something along those lines, a 10x for them would be 120, but like, I don't know, could they go to 200? I think it's easier to imagine a stock price going to 200 than strategy going to 2000. It's like easier to get your brain to go there. So I think those things are all part of the decision making that investors need to go through. And it's certainly possible that Strive is lower down on their S curve than strategy is. So I think it is perfectly rational to make that assumption and weigh that against the extra risk that a company like Strive is just smaller, and maybe the credit markets could lean on them and, I don't know, short them into oblivion or something, I guess, because they're so small. um so yeah, I think really though the determining factor is the authenticity of a company. So this was a concept that a woman named Julie Millard came up with. She got interviewed, I think it was at least 2 years ago now, on Tim Kotzman's show. She was on, I think, twice actually. One was he like did a marathon where he live streamed for over 12 hours. It might have been 20 hours. It was just some kind of ridiculous long time frame.
The
And I
Bitcoin
jumped in
Treasury
there too.
Unconference, I think he called it.
Yeah. I donated some time to that one too to get him through and fill some of the time, that time slots that nobody else wanted, to try to make that happen too. So it was a lot of fun, but her interview is one of the most overlooked, I think, and really underestimated. And she, I believe, is a marketing professor at I can't remember which university down south, and she wrote a whole paper on it, and she described Strategy as the most authentic company at that time. They're transparent. They're constantly, Michael Saylor's always in front of the investors. They've got the website where they display all their metrics, and their mission statement is pretty clear. Well, back then it was pretty clear. It was buy Bitcoin and never sell your Bitcoin, which has come under a little bit of scrutiny lately. I think that a company's transparency, their clear mission statement, and upholding Bitcoin's principles, for me, is the deciding factor. That's kind of like the tiebreaker. And I think Strategy has started to falter in that area somewhat as of late. We mentioned he did get dragged a little bit for, selling the Bitcoin, and it wasn't even selling the Bitcoin, because I was happy to defend that. Like, again, I already said that I agree that I'm subordinate to the prefs. Like, if we've got to sell some Bitcoin to pump the prefs, I'm totally cool with that. But just come out and say that. Come out and say, look, I know I said never sell your Bitcoin. However, we have had to, adjust our business model. And in this scenario, it made sense for taxes. It made sense for, refilling the strategic reserve. And we had to increase the credit quality of the prefs to try to get them back to par. Like, just coming out and admitting that would have been like, people would have grumbled, but then it would have been forgotten in a week. But when you come out and say, well, I never said never sell your Bitcoin, I told you to never sell it. It's like, come on, I've seen 100 of your interviews, dude. Like, I heard you say it. You know what I mean? Like, you can't just tell me that you didn't say something you definitely said. And people have clipped all of the times that he's said it and like strung those together. And so in that sense, he's damaged that, they had the number one spot for Bitcoin authenticity a couple of years ago, and they have kind of damaged that to a certain extent. And other companies can use that to, separate themselves and say, look at me, I've never deviated from our mission, and I've never, they got into a little bit of hot water when they came out with the MNAV guidance and then had to revise the MNAV guidance 2 weeks later. I was actually glad they did revise it, because I thought the original one was a mistake. But, people are still going to just cling to every single one of these little, missteps. And I think that's a way that other companies can really separate themselves, is just being I don't know, as Bitcoin as possible, right? Like, if you are aligned with Bitcoin's principles and values, then I think you can separate yourself from the pack.
What's the end game for these treasury companies? Imagine a hyper-Bitcoinized world. Everyone is using Bitcoin for all transactions. So they no longer have the optionality of borrowing in dollars and like pumping that into Bitcoin and sort of capturing the difference in the interest that they pay and the increase in Bitcoin's price. So that's no longer an option. What's the end game? Like, what's the reason someone would want to keep on holding on to an MSTR or to an ASST?
Yeah, I think Strategy would be a perfect venture capital firm in the future. They're going to have all the capital, right? I mean,
Interesting.
if you have capital, you loan out that capital and you invest in other companies. I think that they would deny it. I think they have no interest in it at this time. And, Jeff pulled up all the balance sheet companies last night, and it was the three examples that he picked were Exxon, JP Morgan, and Berkshire Hathaway. And they do all completely different things. So strategy can do a bunch of different things, right? The metric, and here's why someone would invest in a company instead of Bitcoin. You have to expect a greater return. That's it, period. I mean, unless they're going to be curing cancer and you're like, okay, that's important to me, you could do that in an idealistic way. But just from a pure, self-interest standpoint, you expect that company to go up more than Bitcoin. The only way that that can happen is if they have Bitcoin on their balance sheet and they offer a valuable product or service. Then investors will pay them for the product or service and they can buy more Bitcoin. So that's the whole game. That's all that matters, right? And that's why I said that in the future, every Bitcoin or every company will be a Bitcoin Treasury company, because MNAV may not even be really a great metric. However, every single company on the planet, and probably that will ever exist for as long as Bitcoin is the dominant money, will trade trending towards one MNAV. Now that includes companies that don't have any Bitcoin, which means that their value will be zero, right? If you don't have any Bitcoin and your value of your company is trending towards one MNAV and you have no NAV, then your company it doesn't exist anymore. And so that's where I kind of that's where I come to that conclusion that every company will be a Bitcoin company at some point. Yeah. So right now, though, the opportunity to benefit from the leverage does exist. In 20 years, when Bitcoin's vol is low, lower, maybe this opportunity won't be around, and it'll just be, the Teslas versus the Apples, and everyone will have Bitcoin, and when everyone has Bitcoin, like that levels the playing field, right? And
Yeah.
now it's just back to products and services again. So I think every Bitcoin company will eventually have to offer, I'm going to say real products and services, but competing with the fixed income market is a real product. It's, as we mentioned, it may not win. It may not do what we hoped it would do, but it is a real product, even though it's not physical. But yeah, eventually every company will be competing on an even playing field because they'll all have Bitcoin. And now it's just a matter of, is my product or service better than a competitor?
Yeah, that's perfectly fair. That's also what I think is going to happen. I want to paint a scenario for you and I want to know how you think about it. So imagine it's 2059, 50 years since the Genesis block, and Bitcoin is dead. No one uses it, no one even talks about it. Looking back from 2059, what are the fateful decisions that the community took that led to that future, to that outcome?
Yeah, that's the way that you really should think about it, and think about everything. It's I can't remember if the technique is, it's not reverse engineering, reverse thinking, I think. So there's a if you ever want to be successful at anything, one of the best ways to do it isn't to think, how can I be successful? What actions can I take to succeed? The best way to ensure success is to imagine all of the different ways that you can fail and don't do those things, right? That's actually will allow you to succeed better than if you just try to do all of the right things. If you avoid all of the bad things, then you're more likely to have success. And this is probably going to be a very biased answer on my part, because I've been heavily involved in promoting BIP-110 over the last year and a half. And, of course, there's a bunch of popular influencers, including Michael Saylor, has come out against it very recently. And the way that I would destroy Bitcoin wouldn't be with a 51% attack. Like, we all know that one, right? Like, that's just obvious. We would see it coming, and even baby Bitcoiners like understand 51% attack. So what you would have to do you would have to boil the frogs and you would have to attack every single section one by one. And originally Bitcoin started out where you had the devs who were also the node runners, who were also the sat stackers, who were also the miners, right? So incentives were completely aligned, right? So if Satoshi or one of the other devs that joined the project, if they wrote a line of code that favored the miner or favored the node or caused an extra fee or caused fees to go down, they suffered the costs because they owned every single part of Bitcoin. What we have now is we have specialization, which is completely fine. Like every capitalist society starts to specialize, right? Like I don't know how this microphone is made that I'm talking into, and I really don't care. I'm happy that I'm allowed to, go do my job and not have to bother with how the microphone is made. So I'm totally fine with specialization. But what is starting to happen is now we do not have aligned incentives, right? The devs have their incentives, which I believe that devs are creatives. They're more like musicians or poets than they are scientists. You know what I mean? Like they seem like the egghead scientist type of person, but I think they're more of a creative. So creatives want to create. So I totally get it that they want to write lines of code. They want to make Bitcoin do cool things. And, they want Bitcoin to be everything. And they want it to have all of these non-monetary use cases, right? So that's their incentive. The nodes have their incentive, which is they want to store the least amount of data as possible, right? Like your node has a limited amount of storage, and if you exceed it, I got to go and buy a bigger one, right? And at some point, in order to run a full node, you're going to have a server farm. And Satoshi even acknowledged this, I think, in some of his earlier writings. And then you have the incentives of the sat stackers, right? The people who just want to use Bitcoin, don't want to mine, don't want to run a node, are not interested in coding. They just want low fees, right? They want to be able to transact. And contrary to the fees of the filters argument, if you're sending 50 sats, you can't pay a 50 sat fee. You know what I mean? Like that at some point, someone wanting to transact is priced out if the fees are allowed to skyrocket, right? So people who want to transact, their incentive is to pay lower fees. The incentive of the miners is to get higher fees, right? And that's perfectly rational. I don't hold it against them that they want higher fees, but everyone's incentives are different, and we have all of these different factions. And the genius of Satoshi's creation is that the node runner is neutral. He's the neutral referee that decides who is allowed to mine and by what rules. And so, Sailors talked about, we need to guard neutrality. Well, the node is the guardian of neutrality, right? So anything that supports the node is supporting neutrality. So I think he's correct in his statement that neutrality is important, but for some reason he is not recognizing that the node is the arbiter of neutrality. And so what I would do if I wanted to destroy Bitcoin is I would infiltrate every single one of these areas slowly. And what we see happening right now is what you could argue is a credible attack, right? So we have centralization of the coins, which is, Strategy has this giant, almost millions Bitcoin honeypot, which as a Bitcoiner, the Bitcoin that I was sold is that's not a problem because I can run a node and his giant stack doesn't control the network more than my few Satoshis, right? So I'm not jealous of his stack. He can stack to his heart's content, and I encourage him to do so. But the checks and balances on that was supposed to be that I can run a node and I can mine and contribute some hash power, and he can't, outvote me with his big stack of Bitcoin. But what do we see happening in the other areas? Well, we've had Bitcoin Core, which has had a monopoly on the development since the beginning, right? Up until the resurgence in knots in BIP-110, I don't know, Bitcoin Core had like 95% of the node share, right? There were a few other little implementations that other people had. And so they had a monopoly. So we had centralization of development, and we have centralization of mining because 6 mining pools control 95% of the hash power. And so if you have centralization of the coins, you have centralization of the hash power, you have centralization of the development, and you have centralization of the nodes, that is boiling all of the frogs. And so if that is allowed to continue, that is why Bitcoin would be dead in 2059. And it's why I don't think the accusations that when people say spam is existential, they say that's fear mongering. And I say, no, what we have here is a credible attack in every single area of Bitcoin. And if any one of them is allowed to proceed, maybe Bitcoin wins. But if multiple attack vectors are successful, right? If they're able to centralize nodes and mining, or centralize nodes and have these giant honeypots that they can 6102 attack, that I think would be the scenario where if Bitcoin dies, that would be how it is. And so to get into the reverse thinking, we have to imagine all of the worst case scenarios, use adversarial thinking, and then don't do those things. So we need a solution to spam. We need a solution to node centralization, which currently I don't see a better option than BIP-110. So that's why I'm supporting it. For mining centralization, there are a couple of solutions in the works. I think Datum and Stratum are the two top ones. So with ocean mining, you can actually join the mining pool, but you can create your own template, which means that Foundry and Antpool can't decide which transactions are included. You can do that for yourself. Coincidentally, Luke Dasher is a part of Ocean, and he's been instrumental in Knots. So in that sense, he's actually been a decentralizing force in the problem of mining centralization and in the problem of spam and node centralization. So a lot of people attack him for various beliefs and things of that nature. But really, if you want to hold his feet to the flames for anything, he was responsible and held up as a hero for SegWit. Like, that was his baby. And I don't know that was actually good for us in the long run. So maybe BIP-110 is his penance, right? He's a Catholic, so maybe paying for his SegWit sins is part of his motivation for this. But so we've got Datum and Stratum, which could help with mining centralization. We've got BIP-110 to help with the spam and node centralization problem. The development, we are also going to get multiple implementations, right? So Knots is already an alternative to Core. There's another one called Libitcoin, which is not that popular, but and doesn't really solve the spam problem. But it is an alternative, right? Like, if you're disillusioned with Core, but you have Luke derangement syndrome and you don't like Luke, and you just, I'm not going to run Knots, like, I'll die before I run Knots. Like, okay, there's other things that you can run. And I was at a recent Bitcoin event, and I can't get into the details, because when you attend these events, a lot of times you're like, whatever we discuss here stays here type of thing. But I can say that there are other people who are developing their own alternate implementations as well. So there are other projects coming, right? It's not just going to be Core versus Knots, and then really nothing else to choose from. I mean, Libitcoin already exists and seems reasonable. I think there are some advantages to it, certain advantages to it, but I'm not running that one because it doesn't solve, or not even that BIP-110 solves the spam problem, because it doesn't solve the entire spam problem. It's just it solves certain specific pieces that are outlined in the BIP. Samson Mao and actually Jimmy Song. Jimmy Song was the guy that I mentioned that said, when asked, he would never own a Bitcoin company because he just thinks that the whole stock market is corrupt, right? Him and Samson Mao have started a nonprofit to start raising money for an alternate implementation. They've been not really supporting BIP-110, so maybe I'll hold a grudge against them and not run their implementation as well. But there's going to be more choices. So I think there are solutions for all of these problems. It's just a matter of Bitcoiners taking the steps to prevent Bitcoin's death. I know people say, oh, Bitcoin doesn't need saving, but like if Bitcoiners don't do it, who's going to? You know what I mean? In a certain sense, they're correct. Like I can't save Bitcoin by myself and you can't save Bitcoin by yourself. But the whole point of the soft forks and the hard forks is Bitcoiners believing that they're right and then potentially finding out that they're not. And then Bitcoin is stronger at the end of that. So we have problems everywhere in Bitcoin. There are solutions that very smart, hardworking, intelligent Bitcoiners are working on. And I think as long as we avoid those pitfalls, I think we're fine.
That's great. That's great. It's time for the lightning round. So, I'm going to fire a few questions at you, and you have to tell me the first thing that comes to your mind.
Let's go for it.
Are you ready, Soleil?
I'm ready.
Your most controversial Bitcoin take.
Bitcoin solves the Fermi paradox.
I'm going to ask you what that is, but later. A Bitcoiner you disagree with but still respect.
Forrest Hodel.
Best Bitcoin price analyst.
Oh, price? Sminston with.
The dumbest thing you believed about Bitcoin.
I think it's the only way that human civilization saves itself. So if that's utopian or dumb, then I don't know. I'll be dumb.
Okay. Yay or nay? BIP-110.
Yay.
4-year cycle.
Ugh. Hasn't been invalidated.
Power law.
I hope so.
Quantum threat.
Everybody's working on it. It's fine.
Lightning network.
I like using it.
Okay. Yes or no? We've seen the absolute bottom in Bitcoin price.
No.
Give me a number. How high are we going in the next bull run?
All right, so we're gonna let's do 444. That's the funnest meme.
Okay. Give me a year. When does Bitcoin hit $1 million?
Oh, 2036.
2036. That's my year as well. Awesome. Awesome. This was amazing. So, is there anything that we should have talked about that we haven't yet?
Well, you wanted to ask me about the Fermi paradox, right?
The Fermi paradox. Yeah, Bitcoin solves the Fermi paradox.
So you can only really get to this level of ludicrous, just craziness after a couple of drinks, probably. But the Fermi paradox is the question of why have we not contacted alien civilizations? Assuming that we are not the most advanced civilization in the entire universe, they will be more advanced and be able to travel here. So how come they have not visited us, right? And there are a lot of reasons why maybe civilizations destroy themselves: biological weapons, nuclear weapons, asteroids, their sun explodes, just whatever. And I wonder if a civilization has to invent sound money, meaning you have to discover Bitcoin or else society just destroys itself. I don't know if you've seen the book Soft War by Jason Lowry, but there's something in war called escalation dominance, right? And so throughout time, we've had sticks and rocks, and then we've had swords and body armor, and then we got cavalry, and then we got bow and arrows, and then we got tanks and planes and ships and nukes, right? And once you get beyond nukes, what can you do, right? We're just dead. And so if the Fermi paradox could be solved by Bitcoin, right? A civilization cannot survive long enough to figure out a way to get off planet, right? To get ourselves to Mars and then to get out of the solar system. If we don't discover sound money and we just end up destroying ourselves.
Interesting. I realized when you described the paradox that I've heard of it.
Yeah.
So, Soleil, this has been very interesting. Where can people go to find more of your work?
So I'm on X. The handle is probably right there, at Night Who Says Knee. And I have my YouTube channel where I stream every day. I think it's the same name, but it might be broken up. Like the Night Who is probably broken up from the SESNI. And I have my show called Orange Pill Investor on that every single day that the market is open. And then I'm on True North on Wednesdays when I can fit it in. And yeah, I think that's it.
Yeah, that's very cool. I'll link everything in the description. Thank you so much for doing this, Soleil. This has been a blast.
Great. Yeah. I mean, thanks for asking great questions. I really appreciate it.